Good morning, everyone. Well, the dollar was generally stronger this morning. It gained against most of the G10 and the emerging market currencies. The only real exception in the G10 was the Canadian dollar. Dollar CAD surged through 112 in early U.S. trading on Friday, but then fell back sharply as money managers rebalanced their hedges at the end of the month. Given the technical nature of that move, I expect it'll be only temporary, and frankly, I think this pullback in dollar CAD may represent a good opportunity to establish new long dollar CAD or short Canadian dollar positions. The government and the central bank agree that the currency is too strong, so why fight them? Aussie dollar was down only slightly after the official Chinese PMI came in as expected at 50.5. The Australian PMI, on the other hand, fell further into below 50 territory, and Australian building approvals were below expectations. Now, there's an RBA meeting on Tuesday. The market's pricing in a 96% probability that they don't change rates, so that looks pretty certain. The big question then will be what hints they give for the direction of future policy. Since September, Governor Stevens has ended his statement with the neutral comment that the board will continue to assess the outlook and adjust policy as needed. And that's giving no indication whether they think they will need to adjust rates upward or downward next. That will be the market's focus. Some people have argued that with inflation at 2.7% in the upper half of their 2% to 3% range, it's unlikely to make any hints about easing policy. The last time they hinted about easing rates was in July. Then they said that the board also judged that the inflation outlook, as currently assessed, may provide some scope for further easing. They then cut rates the next month. However, remember, inflation then was at 2.5%, not far below where it is now, and note that they stressed the inflation outlook, not the current inflation situation. It's possible that with China slowing and the Australian economy also weak, they come to the same conclusion again and hint about another cut in rates, which would weaken the Australian dollar further, a result that they'd probably welcome. Now, today is January PMI day. We already had the official Chinese PMI, as I mentioned, and the Australian PMI, which declined. Sweden, on the other hand, unexpectedly soared to 56.4 from 52.2. We're due to get figures from Norway, Switzerland, Italy, and the UK. The UK PMI is expected to be unchanged from December. That should at least keep sterling steady. Germany, France, and the Eurozone as a whole also published their final manufacturing PMIs for the month. In the US, the ISM manufacturing PMI is forecast to have fallen to 56.0 from a revised 56.5 in December. That could dent the strong dollar temporarily. As for the rest of the week, the main event will be the ECB meeting and Bank of England meetings on Thursday and the non-farm payrolls on Friday. Please take a look at the full comment on our website, IronFX.com, for views on those, as well as technical analysis. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.